So the Fed just cut interest rates, and some people are freaking out, but some people are stoked thinking the markets are about to rip. Talk about what it means for you as a business owner or an investor. I don't want to go through all of the high-level technical analysis and jargon. I want to focus specifically on what I think it means practically for you. The first thing people think about with cut rates is, great, mortgage rates are going down. In reality, that may not happen, because in an economic environment where people have less money, less ability to pay for those mortgages, then banks are going to compensate by increasing the interest rate that they charge for a mortgage, regardless of the Fed funds rate. So there's no guarantee that mortgage rates are going to go down at all. The main reason that the Fed is cutting rates here that they referred to is employment. If you look at the recent jobs reports, jobs are not looking so good. And as a CPA to many business owners, I could tell you that business income is also not looking so good for many business owners. So it seems that the Fed is really just concerned about people's employment and ability to make income. But here's the thing, if they cut rates, does that mean the corporations that issue debt are just going to turn around with the interest savings and hire people? Well, there's a lot more variables in play for the employment markets. Like, what impact is AI having right now? It's still so new that it's hard to say exactly, but how many anecdotal stories have you seen of a company that builds out this AI model or this AI technology and process and then fires everybody that built it or that used to serve those positions, and they keep 1 or 10% of their staff in order to maintain those AI systems, but don't need the bottom 90%. There's been quite a few anecdotal stories about this already. So we don't know whether dropping interest rates is actually going to help with the employment markets or help people start to make that much more income. Hopefully, but there's no guarantee. And here's the third issue, is inflation, right? The Fed has the dual mandates of employment rate and of inflation. Well, inflation is already above their target. It's at like 3% right now, the way they calculate it. Goal is 2% per year. So 50% above the goal. It's like, okay, only 3% inflation. Argentina had like triple digit pretty recently, but still our US dollar is eroding, and 3% versus 2% means the value of our US dollar loses 50% of its value 12 years faster. And so the fact that they're cutting rates while inflation is still above target shows you that, inflation is just going to continue happening, but it could be even worse, this continual loss of jobs and income. And so should we allow inflation to get a little bit worse, or should we allow this income dip to get a little bit worse? Well, we need to say the income dip because things are not looking so great. The markets are already pricing in potential drops. So, all right, screw it. Let inflation go up a little bit so we can save people's income. That's an oversimplification, but that's kind of what the decision is right now. And so guess what? Inflation is not going to go anywhere. I don't see why it would all of a sudden go down like they're dropping interest rates. Usually what happens after you drop interest rates is inflation goes up, more money gets printed and goes around. And so, there's no guarantee inflation continues to rise, but I think it's a pretty safe bet to understand that the cost of living is going to continue to go up. The prices of everything is going to continue to go up. So the ultimate lesson here is be the person that has things for sale, because prices are going up. If you have assets, you own homes, if you own stocks, if you own something that people buy, business as well. Business is often inflation resistant. If you have services and knowledge that people want to buy, you can continue to charge more and more and you can survive out here. But if you're just trying to survive by watching Netflix and having a W-2 job, understand that getting a 3% raise every year from your $40,000 a year job, inflation is going to eat that alive. Like, I don't even believe the inflation reports that they've submitted, because we've all seen groceries, like the average things we buy go up like 2x, 3x over the last like 5 years. And so they say, it's only 3%, 5%, 6% at the worst. It seems like it's been way more than that. Like, just using your eyes and your ability to do math, take a look at the prices like years ago and buying a steak when it was $9 a pound and now it's $25 a pound. Yeah, is that 6% inflation over the last 6 years? Obviously not. Obviously the inflation for many things is way higher than they're saying it is. So understand that it's not transitory. That was a lie. Inflation is here to stay. Inflation is here to continue. And so be the person that is selling, owning assets that increase in value, selling services that increase in the price that you can charge. Own skills and knowledge and experience that people want to pay for, and your income will continue to increase. You will be just fine. Understand that these are economic hard times. This is not the end times. That means this is the part of the cycle where the weak people have created the hard times. What comes from the hard times? The strong people that create the good times. So if you are not actively participating in being a strong person that wants to create good times, then you are simply going to wither away and live a sad existence while we experience these hard times. It is what it is. The way you deal with this, the way I'm dealing with this personally, is laughing at it and understanding that I have to do everything I can to maintain skill, maintain energy, maintain market value. The relationships that I have, AI cannot replace that right now. Whatever it is, I have things to sell and I'm going to be okay personally. A lot of my clients are going to be just fine, but I'm seeing a lot of people going through hard times, whether that's income dips, increases in cost, just didn't see this coming. A lot of people are struggling right now. And so if you're struggling, understand you need to accept reality for what it is. And here's reality. It could get worse. And so if you aren't adjusting your lifestyle, if you aren't living frugally, if you aren't learning and improving, if you aren't finding ways to enjoy yourself while saving money, if you can't go for a walk, go for a hike, go to the beach, enjoy life for free, you have to spend money, you have to go shopping to feel good about yourself, all right, live in that trap that our society puts us in. But if you can find joy out of reading a book and improving yourself and saving money, you can gamify that, you can live a really good life still. You just need to have a plan in place. Make an emergency fund. Make sure you're investing in your retirement account. Make sure you have a budget so you know you're not spending more than you make. Put a little bit of money into Bitcoin, right? Bitcoin definitionally is a deflationary asset. There's a fixed supply. And so I'm not saying Bitcoin's for sure the savior, but I'm saying Bitcoin was created as a solution for this exact problem. And so there are hopes. It is in increasing your market value in what you sell, yourself, your skills, your products, your services. It is in owning assets that are resistant to inflation. Homes, stocks, Bitcoin, all of those. Be frugal, invest, just be grateful for what we have. And if you do those things, you're gonna make it through these economic hard times. Every generation goes through these periods where we go, man, the sky's falling. And it's literally the end times. And then there's more times, right? And so this is the middle times. This is just the middle times, okay? And so just adapt or die. That's really it. You'll be all right. Do business, increase your skills, be frugal, have a plan. That's what I had to say. That's what you need to take away. All the technical information that you can go and gather on this. Where should I invest? What should I do? You should invest in yourself. You should have a plan. You should have peace and clarity from that plan. And you should continue enjoying life by getting better and being grateful for what you have. Rates are going to be cut. Rates are going to be increased. The economy is going to go through hard times. The economy is going to go through good times. These are all material things. There's more to life than just rate cuts and Fed decisions. So hopefully this was helpful. Ultimately, discipline. Financial discipline is the answer. Saving money, making more money, being smart with that money is the answer. We'll be all right.